Yeah, market sniper, Euro USD, mentioned it on the drive, and yeah, this is the one. So Euro had been getting stronger for a large part of the second half of the year, up, 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 up. Then it had a little revisit to the 117 level. You'll see this level become significant again. We've got a bit of a retrospective draw here, HVF. You'll learn what a retrospective draw is. Made target, pull back, grind line through there. You'll learn what a grind line is if you pop over and do a program. Anyway, marginally higher high is bearish. You'll learn why and why we apply the marginally higher high rule, and why the average support and resistance trader always loses. That just run. Big sell-off. Again, a grind line under that. We chatted about this as an inverted HVF with that gap there as to where our H3 and our L3 is. We finalized it on that level. So that was a gap down revisit to funnel, and then there was a trigger of the round number HVF method for head and shoulders. Only HVF method can show you how. That was a break, a little bit of a jiggle on the round number, 18.5 down, down, down. Clean to your inverted HVF target. Quite a reasonable rally. So you get your rally and your progress decay on the HVF method, but then you finish your head and shoulders with that being your bumpiest part of your move, which you avoid by getting out over here on the HVF. But if you're holding out for the absolute return, you get that taken over there. Interesting enough, it brings us down to the round number of 117, which is our working head and shoulder for that left shoulder, this all being a head and with that being a right shoulder. And we often get upside HVFs on the left shoulder and inverteds on the right. How HVF methodology dovetails with traditional technical analysis, it's uncanny even in reversal patterns. So your draw may look something more like this chart. And this has got a lot of detail showing the grind lines, showing your entries there. Look at that line of efficiency. How steep is the line? That means how much juice are you getting in how short a time. So there's a cost of being on risk. Apart from the risk, there's financing charges. You want the steepest line. If you'd gone on the head and shoulders, you would have made that. Roughly the same profit. If you'd gone in there and held all the way for the head and shoulders target, you would have got an aggregate of the two, but with extra profit. There's your grind lines. This is setting up, I suspect, as one scenario. Doesn't mean it has to be, but as one scenario that we'll get a high 3 here somewhere. We hope not too strong for our bear scenario. So if we were to get a high 3, I would draw it something like this. And you'd have a third final there, and you would break the 3 low. That is already indicated there, and that would be a trigger for the sell. You'd probably bounce on the round number of 17.5, get a small rally. You'd bounce again on the 17. That would be your head and shoulders neckline. Yes, let's write it in. Potential HVF method neckline. Potential HVF method neckline at the 117. And you usually get a return move, so that's why we'd plan a scenario cast where that happened. You'd get just back above the 17s, and then you'd probably smash down. Because we've got an HVF target, I'm guesstimating that target will be 118. We haven't got that third high, but that would be in line with the previous funnel on the upside. It's amazing how often these dovetail. That's why we do the retrospective draw, to get that funnel information across. If you want to learn how to chart like this, there's no shorthand way. You can watch these YouTubes and you can pick up a small bit. I get guys that are following and saying, yeah, I've got it, I'm making trading HVFs quite successfully just from these YouTubes. You haven't heard a third of it. And there's no substitute for investing in yourself if you do want to do this properly. But anyway, that little rally aside, we would then probably get the eventual completion all the way down to, wait for it, 113 levels to be run. So that would be the target for me. So that's not a bad trade if you can get it short north of 118 and hold short till all the way to 113. That would be a bit of weakening in the euro. Could be strength in the dollar. We will see. Because there's something to bear in mind there. If it's strength in the dollar, how will it affect our Bitcoin trade, etc., etc., etc. So we'll be watching this and the manner in which it progresses. So your Euro USD, a full analysis, HVF method style. Good luck with your trading. Trade small. This is not a recommendation. This is my take on a market. It is a probability-based assessment, not a guarantee. Enjoy yourselves. Have a great weekend. Francis ending out.